Hey guys, Will Terry here, and this video is going to be totally different. I haven't posted in a long time. I haven't uploaded in a long time, and that's because I've been putting my energy into SVS and my game project that I'll be sharing with you shortly. You know that if you've been with me for the last 10 or 12 years since I've had this YouTube channel, I've shared things that I think are meaningful and important to people in the illustration community, especially on the business side. And I've never really talked about investing. I want to talk to you today about Bitcoin. Obviously the title, right? If you made it this far, you've clicked into a Bitcoin video. But I want to answer the question, why did people think that Bitcoin would never get to zero point 0.01 or 1 cent? Okay, it was trading below 1 cent, but it got there. And then those same people, when it got to 1 cent, they said, well, it'll never get to a dime. It'll never get to 10 cents. And then it got there. And then they said it'll never get to $1. And then it got there. And you can look at videos on YouTube of people watching the chart when it first hit $1 and then being blown away. If you've been following Bitcoin, you know that it's much higher than that now. Same people thought it would never get to $10, but it did. Never thought it would get to $100, but it did.
I'm right here watching history be made. Bitcoin is now up to $111.
Never thought it would get to $1,000 or $10,000, but it did, and it did. Are you going to put in the comments, Will, you're an idiot if you think this is going to get to $100,000? I mean, think about it. People that know nothing about it, and I have had discussions and argued with family and friends and talked to them about, by the way, I've got hundreds, if not over 1,000 hours studying Bitcoin. When it hits $100,000 later this year or early next year, there will people that will tell me it's still going to zero. Oh, really? And it'll never hit 1 million? No, it'll never hit 1 million. Well, that's pure ignorance. And so in this video, what I did was I went on my Facebook and I asked if there was a group of people that would like to learn about what Bitcoin is. There was a pretty decent group. I was a little disappointed in how many people actually showed up, but there were people that showed up. And I recorded a presentation on why I think Bitcoin's valuable and basically answering these 5 questions on the screen. If you want to protect your wealth amidst a country that is, I'm talking about the US, where we are destroying the dollar at an alarming rate, and with our dollar, we are actually destroying the currencies of other countries at a much bigger rate. So inflation worldwide is running hot. It's running hotter in countries outside the US, but it's still very high here. If you want to find out how to save in a currency that is actually appreciating in money instead of depreciating in money, keep watching and find out why I think Bitcoin could actually save your career, could save your family. I am not going to offer financial advice. I'm going to tell you why I think Bitcoin's valuable. So let's dive in. And so this is being recorded. I do plan on putting it on YouTube. I also want to give a disclaimer that this is not financial advice. I am pro Bitcoin, but I'm not trying to get you to buy Bitcoin. I'm just telling you why I like it and why other people like it, and going to be sharing basically how it works and basically answering these 5 questions right here. So the first thing I want to talk about is that Bitcoin was designed to be digital gold. It was designed by a guy named Satoshi. We don't know if that was a guy or a girl. We don't know if it was, I guess we do know it was a guy because he refers to himself as he. Excuse me. We do have email releases from him, and he worked with a team. So we have names from some of the people that he was corresponding with. And those emails you can Google and you can look at them. They've been released. He's released them. And he also released a white paper, which in financial terms is like a scientific paper for science. In the finance world, it's called a white paper. So you can read that. You can just find that on the internet. But he designed Bitcoin to be digital gold. And the reason for that was he felt like we needed a digital way to send value to each other through the internet. Whereas like right now, you can't send physical gold around. Looking at gold versus Bitcoin, let's just look at some things. And by the way, I like gold and I also really like Bitcoin. And I think you can like both. There are some that are in the gold only camp and Bitcoin's no good and vice versa. But some of the properties of money are that it's limited. I threw mining in there because we're talking about gold, but this is also refers to money as well. That it's portable, durable, uniform, and that it's acceptable. Another one that people put on that list is fungible, which basically means that you can mix the money together and you can't tell what you've got. So like if I handed you $5 and you handed me three back, and then I handed paid you again out of those three, you wouldn't be able to tell which ones you had first and second. They all look the same. Let's talk about limited first. This represents all the gold in the world. If it was all melted down, every bar, every coin, every headdress, every Incan artifact would fit in that one side of a Olympic swimming pool and would be, I don't know how high that is, maybe 40 or 50 feet high. So it's pretty small, and it's very limited, and that's why gold has been valuable over the years. Bitcoin is also was programmed to be very limited in that it only has 21 million coins that can ever exist. However, 5,000 of those are estimated to be lost and gone forever, leaving us about 16 million coins. You might be saying, well, that's not enough money because there's 59 million millionaires in the world. And again, if we go back to that and look at 16 million possible coins, that's not enough money to go around. But Satoshi was smart. Well, before I go to that, I'll just show you right here. A lot of the early coins that were mined, the reason why they're lost is because people bought them for a penny each, 5 cents each, whatever they were going for in the first few years around 2009, 10, 11. And because they spent $100 or $50 or something on thousands of Bitcoins, they were basically valueless to them. And when they threw away their computer and got a new computer, yep, they lost a lot. So a lot of them have been lost that way, and that's the estimate right now, is that about 5,000 are lost and gone forever. But Satoshi grouped the coins that it can be broken up into, and there's 100 million pieces in each coin. So the idea is you start with 21 million, but over time we're going to be dealing with Satoshis. If it catches on and the whole world is using Bitcoin, we won't really be talking about coins anymore. We'll be talking about the fractional pieces called Satoshis. Um, when one Bitcoin hits 100,000, again, this year we hit an all-time high of 73,000 a few months ago. When it hits 100,000, one Satoshi will be worth a tenth of a penny. When it hits a million, it'll be a penny each. 21 million times 100 million is 2.1 quadrillion. And that's how many pieces there are in the system. So he designed that so that there would be plenty of money for the whole world to use. You can see here's a $100 bill, $10,000 in hundreds. Then we skip to 100 million. It's a pallet. And then a billion is, was that 10 pallets there? And a trillion is like the size of a skyscraper. So it's estimated that there's about 90 trillion, right? Um, dollars floating around in every currency. So, and here's one quadrillion. So 2.1 quadrillion is more money than the world's ever seen before. So there's plenty of units to go around. All right, let's talk about mining really quick. Of course, you mine gold, and this is a gold and industrial gold mine right here. This is a Bitcoin mine if you've never seen one of those. And Satoshi built in the aspect of mining because in order to make gold valuable, one of the aspects of gold being valuable is that it takes a lot of work to dig it up and get it out of the ground. Well, it takes a lot of work for computers to basically mine and bring Bitcoins into the system. So the software Bitcore was designed um, that 21 million would be possible, but computers have to solve complex algorithms to actually bring them, find them in the system and bring them out and into ownership for those who mine them. And then the people that mine them can sell them. So there are thousands of mines around the world that look like this, and there's thousands of smaller ones, tens of thousands of smaller ones. There's about 1 million different mining operations going on in the world to mine Bitcoin right now. And this little graphic really shows it even better. And this is, what is Bitcoin mining? So let's say Alice wants to buy a product from Bob using Bitcoin. So she uses her private keys, which I'll talk about later, and signs a message with an amount of Bitcoins that she's going to send to Bob. And she puts Bob's address in there, requesting a transaction. Then the transaction requested by Alice is bundled into a block with thousands and thousands of other transactions. That block is broadcast to all the mining nodes. So all of those mines you saw in those pictures get a chance to compete to solve the algorithm and transfer that to the ledger. So the network of nodes validates Alice's transaction using algorithms in a process called mining. The first miner to validate a new block for the blockchain receives a portion of the Bitcoin as a reward. The transaction is complete and the new block is added to the blockchain. And then Bob receives his Bitcoins from Alice. So the blockchain is a ledger, a public ledger that anybody can look at. You could look at it if you downloaded the Bitcore software. You can look at the whole ledger and you can see all the wallet addresses and you can see every transaction on there. Let's talk about portable. So if you're trying to drive or fly with cash or gold, you're really running the risk of it getting confiscated if you're on the highway. If you try to get through an airport scanner with gold, you're just not going to, and they're going to stop you and they're going to confiscate what you have until they do an investigation to find out if you're a criminal or not. With Bitcoin, you can travel anywhere in the world, and that is, we'll talk about it later, but that's hugely part of the value of Bitcoin over gold is that it's really hard for someone to know that you have it. And we'll talk about that, the reasons for that later on. So it's very highly portable. One of the ways you can take it with you is in a wallet, a Bitcoin wallet. We'll talk about those a little bit towards the end. But here's part of the beauty of this system. These are 2048 words, which you can't really see right now. These are Norm would know. He's a computer guy, IT guy. But 2048, from what I understand, is a computer number for a certain bit, 256 or one. Anyway,
Are you
um,
meaning to share your screen
Yeah, it's
right now?
basically like two to the eighth is 256, and then you go 5, 12, 10, 24. So it's like two to the 12th power or
there we
something
go.
like that.
Yeah, sorry, I missed some of these slides here. I think that's where I stopped, right?
Yep, that's where you stopped.
Okay. So I was talking about portable and gold and silver, and you had to see the scanner at the airport and wallets. Anyway, so these are the 2048 words, and here you can see a zoom in of them, and they're just random words, and it's a neat system where Bitcoin, when you get a wallet and you download your Bitcoin onto that wallet, and there's other ways to do it too, but the easiest way is to download onto a wallet. The wallet will actually access the network, and the network will assign you 12 of these words at random. And so here's an example where you'd have 12 words at random. The order matters. And that's your what they call your seed phrase. That is actually your Bitcoin. So the wallet doesn't really hold your Bitcoin. The Bitcoin is simply a 12-word seed phrase. Now you can also use a 24. It started with 24, but then mathematicians figured out that 12 out of 2048 at random is actually, some people are saying there are more combinations than there are sands in the seas in the whole universe, and other people say that that's not exactly true. So I'm not going to make that claim, but it is pretty much uncrackable. So let's talk about durability. And that is with today's computing power, their theory is that there could be quantum computers down the road that would be able to crack it. But by then, like a Y2K patch, there will be other patches that the Bitcoin miners and nodes will accept to make the encryption even stronger. So let's talk about durability between the two. Obviously, we know gold's durable. You can melt it, you can pound it, you can do anything, and it never ceases to be gold. The durability of Bitcoin is that there are over 18,000 nodes worldwide, and those nodes are all plugged into the Bitcoin network, which is independent. It's its own network. You can't even access it with a regular computer. With a CPU, you have to have an ASICs computer to access it, which looks like this. running Bitcore software, and all of those nodes around the world all have to verify every change to the ledger. So every time that you send Bitcoin to someone else, that ledger gets updated by all 18,000. All 18,000 nodes have to agree that that is a valid transaction. And that's where the
So
hardness and
are there
durability for some
these
reason.
verifiers that are like a minimum nodes that are like a maximum number? Like, hey, there's never going to be more than 18,000 or
No, anybody can run a node and anybody can plug into that network. And
something like that?
it's growing every year. Yep. Yep, it's growing every year. So Norm, if you have something, throw it in the chat then. So, um, how hard would it be to brute force Bitcoin? So this is not me. This is what I pulled off of Google. That's the entire point of asymmetric crypto. The amount of effort you would need to brute force 2 to the 160 keys, is that power? I don't know. Is staggering. Even if you made billions of ASIC processors and ran them until the end of time, you probably wouldn't find the funds you were looking for. This brute force uh, problem is constantly suggested and is always useless. We're still on durability. Bitcoin runs on open source software. This is something that is, I think, is so important to the discussion of the durability of Bitcoin because it lets programmers all around the world look at the code and see if there's any backdoors in there, to see if there's anything that looks buggy, see if there's anything that is a security issue in any way, shape, or form. And so anyone can run the Bitcoin software and make their own coin. And we'll talk about that a little bit later. Uniformity, I'm not going to talk about that because it's pretty obvious that gold, again, no matter how you melt it down or pound it into a coin, it's going to be gold. Same with Bitcoin. Every every Bitcoin, every Satoshi is uniform. That's a problem with other forms of money over the history of time, but that is something that is it's something that is really important for something to be accepted as money. Acceptability, this is probably the one, the main thing that you could say that someone could say is a problem with Bitcoin right now in that it's not widely accepted yet. Okay, so you have certain areas of the world that have had real money problems, like El Salvador, who Nayib Bukele, the president of El Salvador, has adopted Bitcoin as a recognized currency in the country that people can choose to use, pay, and accept with Bitcoin. Um, and El Salvador is heavy into the mining of Bitcoin right now, and so far it seems to be working. It's not perfect yet, um, and there will be layer two solutions that we could talk about later on that will actually help Bitcoin be better used as money for making payments and stuff. But it's an interesting thing. Currently, there's over 15,000 businesses worldwide that are accepting Bitcoin, and 2,300 companies in the United States. And a lot of the states are already adopting laws or passing laws that are what we would call Bitcoin friendly. And you can Google those or you can look at the recording of this. I'm not going to sit on this and read this whole thing, but basically, it's does seem to be really catching on and becoming more and more acceptable. Another one that I'm going to add on here is decentralized. And one of the problems with our banking system right now is here's the Canadian truckers we all remember from the cerveza sickness, right? Now I plan on putting this on YouTube, so I've got to talk in code words, right? When those guys refuse to get the
Modelo
vaccine,
virus.
the what?
Modelo virus.
Yeah, the Modelo virus. There you go. And what happened was they got their bank account shut down. That's what broke the strike. So your money isn't your money when you put it in a bank. And in fact, there are there's there are rules that have been passed when you don't read the fine print on your bank account where you're actually loaning the bank your money when you make a deposit. You're loaning them the money. They basically owe you the money, right? So they owe you that money, but it's not necessarily yours. If the bank becomes insolvent, they can choose to pay off all their other CEOs and all the people ahead of you in line, the big money ahead of you, And if they don't have enough left, they can say, sorry, we went out of business. We went bankrupt, right?
It's basically like you're a shareholder.
Right. That's that great. Thanks, Norm. Yep, you're a shareholder. FDIC has $125 billion in its fund to backstop the banks. Bank deposits are 17 trillion. So basically FDIC covers 1.4% of our banks. I have a theory that there's no way that the government would ever not create money to backstop more than the FDIC fund has in it. I can't see them going, well, FDIC ran out of money and everyone else is screwed. And by the way, if you Google it right now, there's a lot of sites, including CBS and CNN, that are saying there's hundreds of banks that are underwater right now that are in trouble of being insolvent. That's a problem. Now, if the government prints money or lends money into existence or whatever they do to put money on the books, that's going to make inflation worse, right? And so anyway, we can talk about that in a little bit, but basically Bitcoin has no headquarters, no CEO, no employees, no marketing team, and it operates 24/7 with no holidays. So how in the world did this thing catch on without a company behind it? Meanwhile, all the other coins, and I am definitely a Bitcoin maximalist. There are people who like a lot of other cryptocurrencies, and the Bitcoin people tend to say Bitcoin is not a cryptocurrency. Bitcoin's Bitcoin, and all the others are cryptocurrencies because they all have headquarters, they all have CEOs, they all have employees, marketing teams, and the dirty secret that a lot of people don't know is they have pre-mined coins that they give to all their friends and family, all the workers, the CEOs, uh, uh, everybody that's in management gets these pre-mined coins. They hype it, they pump it, and then when it goes up, those guys are all looking to sell these coins that weren't even supposed to exist because when you got in the beginning, you were supposed to be buying the first coins. And they can change the rules anytime. Ethereum was proof of work. Now it's been changed to proof of stake. And you as a Ethereum owner don't have a say in that. With Bitcoin, I think has to be a 51% consensus to change. Yeah, that's what it is. 51% consensus to make any changes to the network. And so with owners all over the place, that's going to be really hard to make a change, especially to add more coins. And that's going to be a problem with a lot of these other coins is the temptation to make more coins to sell is going to be really tempting. And a lot of the coins don't have a limit. They're unlimited. So that's kind of goes against all hard money principles. Let's talk about, does it have value? These are all have been or still are used as money in the world, right? Different forms of money. And so the problem again, I kind of led into this already, was the Chinese were using these cowrie shells. But what happens when someone finds a hoard of shells that wash up on a beach, or they find where they can dive down and get them for free? And there's more and more that are coming into existence because people are incentivized to go find them. They're not all the same, not exactly uniform. So there's problems there. And if the money supply continues to expand, prices begin to rise because you have more money chasing after the same goods and services. And so you have an increase in the demand for labor, and that all leads to inflation, which we're seeing tons of it right now. And the government lies with the CPI data, but the true number is usually double or even triple that on some goods and services. And then they tell you that in the basket of goods for CPI, that they used to have steak in there, and then they changed it to hamburger because you don't really need steak. And so it's not it's
So basically, you're talking about debasement and inflation.
that's right. Debasement inflation. Yep. So if you look at the Federal Reserve Bank, this is the M3 money supply, the broad money. So this is like all the money in the system that's out there right now, and it's about $2 trillion or 20 trillion dollars right here. And you can see where we were in 1965. I was born in 1966, somewhere right around here. and our money has just expanded. We were taken off the gold standard sometime during Nixon. And so we are not pegged to anything of value. We just are creating more and more units of money. And I think that's going to get worse and worse over time because of our debt. We've never had this much debt, and the service on the debt is costing us more and more in interest every year. And at the same time, Bitcoin, the more we mine, the less there is, right? And so in 2021, there was 1.7 million remaining. We're now in 2024. That's an estimate that there's about 1 million coins left to be mined. And the last coin will actually be mined in the year 2140. And I'll talk about that a little bit in a little bit here. This is an interesting chart right here. This is the internet adoption rate versus Bitcoin down at the bottom. So you have the internet at the top. The internet started in 1994. And so for the first 15 years or so, we can see this dotted line right here. You want to say something, Norm?
Oh yeah, are you basically saying that Bitcoin is mining is going much slower than it was a few years ago?
Am I? No, mining's not going slower, but there's a halving that I'm going to get to. I'll show you why. Yes, we are mining fewer and fewer coins every 4 years, and I'll show you why. But this is basically the adoption of Bitcoin following the same arc as the internet. So you have Bitcoin, which started in 2009, really technically, but we have 10 here, up to 24, and the adoption rate. You can see the internet adoption rate is 1%. It's not a linear chart. I believe it's called a logarithmic chart, where it's exponentially. You have 1% here, 10% there, and then you jump to 100. And then over here on Bitcoin, you have 0.01 Bitcoin, zero point 0.1. Here's 1 Bitcoin right here. And I'm sorry, these are dollars. So this is 1 cent, 10 cents, a dollar. And you can see right now we're at about $60,000 Bitcoin. And we're right in this range right here. And so it's following the same amount of adoption. And there's 46 million wallets holding Bitcoin today. So 46 million people out there have bought wallets, or some people have more than one. So it might not be quite that many, but that number is growing every year. I want to talk about the network effect really quick. And basically, that network effect is that once a network gets to a certain size, no one can really compete with it. So if you look at these companies, the reason there's not two Amazons, the reason there's not two Apples or two Instagrams or two Facebooks is because the network of users is so large that anyone else trying to compete is just drowned out. Everyone kind of feels like, well, I already have a Facebook account. I don't need your version of Facebook. You could take the
I
best,
don't need Truth Social or whatever.
right? I don't like if you took the best engineers from Twitter and you said, go make a better Twitter, they could make a better Twitter. They could make one that has better code. It could have all kinds of features that the current Twitter or X has and better, and it wouldn't catch on because that network is already established, already there. So that's the theory with Bitcoin, and one of the reasons why Bitcoin is so huge. And by the way, there have been this just is a partial list, but these are all the coins that because again, I remember I said Bitcoin's an open source software. These are all coins that are just copies of Bitcoin with a different name and a different network. And they're all, they're different companies that are putting these out trying to be the next Bitcoin. Well, when I first started, oh, here's the top one. So the top one is Bitcoin Cash. And um, Bitcoin Cash is trading at 328 yesterday when I made this. Bitcoin was about 61,000. I just put 60,000 there. So you can see like they're not doing well against the Bitcoin network because the Bitcoin network got such a head start. Back in 2015, I had 5 grand to invest in crypto. I was using Robinhood, and I looked at Bitcoin and I couldn't understand why it was trading at 500 and Litecoin, which I don't know why I liked Litecoin, but it was trading at $50. I'd heard some things from other people about it. I like the UFC. The UFC adopted it as their their cryptocurrency and, have done, promotions for Litecoin because again, they have a company. Bitcoin doesn't have a company. So I thought I had unit bias, what they call unit bias. I could buy a lot more Litecoins than I could Bitcoin. And why would anyone pay $500? I could only get 10 of those. I could get 100 Litecoins. So that's what I did. Well, if I would have held that Litecoin, today it would be worth $7,400, where the same amount of Bitcoin, 5,000 of Bitcoin would be worth 600,000 today. And that's kind of what's been happening with most of the what they call altcoins, alternative coins, is most of them are not doing well at all. So again, that's the network effect. Another interesting tidbit about the value of Bitcoin and the acceptability is that Bitcoin started this is the list of 100 top 100 assets in the world. And Bitcoin started not on the list at all, obviously. And over the last 15 years, it has constantly and steadily risen up to where it's now number 10. It was number 9 a few months ago when it hit its all-time high, and then it dropped back down a little bit, just under Facebook. So that's an interesting thing to a lot of people. A lot of people don't realize it has a $1.2 trillion market cap. So it is gaining. Silver, for instance, all the silver in the world is 1.6 trillion. So I feel like it will probably be ahead of silver pretty soon. Is Bitcoin predictable? So, Norm, this is what I was talking about before. There's a halving schedule for Bitcoin. And the reason why there's fewer Bitcoins mined each year is because Satoshi basically programmed the money to be stuck in time. So gold is stuck in the earth and Bitcoin is stuck in time. And the reason for that is he didn't want uh, companies and corporations and miners to be able to just pull out all the Bitcoin in a year and just ramp up. He wanted it to be able to be dispersed over time. And just like gold, where the more gold we dig out of the earth, the less there is. Now, our mining capabilities are getting better and better. So we've actually been getting so good that we're actually pulling out more gold than we have been. Um, and so the production of gold hasn't been diminishing as you would expect it to if technology was the same. So we're pulling out like microscopic gold and fine gold that you can barely even see with your eye out of these big mining operations now. But Bitcoin is stuck in time, and it's going to take more than 100 years to get all of those coins out. So every halving is basically the first halving was in 2013, and let me just skip to this next one where I wrote these in there. And when Bitcoin first started, there were 7,200 coins that were able to be mined in any 24-hour period. And so every 24-hour period, there were roughly 7,200 coins mined for almost 4 years until the halving in 2013. And then it got cut to 36. Then it got cut to 1,800. Then it got cut to 900 in 2020. And we just had our halving in April of this year, 2024. And now the new block size is 450 coins per day. In 2028, that's going to be cut down to 225. So the interesting thing is that over time, fewer and fewer coins can be mined, meaning that the scarcity is going up over time. But a really interesting thing to look at here, and again, this is not financial advice. This is just a guy looking at a chart and seeing something pretty interesting to me, is that these green zones are run-ups the year after the halving. So you have a halving, and then you have a year, sometimes 2 years, where that's when the market will respond to that halving. And then you have kind of a sideways trade, a halving, and then the next, look at it, 2017 to 2018 is when that runs up. So it takes a while. It runs up to a new peak, and then it, like market cycles. I know, Norm, you know a lot about trading. There's, the market becomes oversold and then becomes undersold, and then it becomes oversold and undersold. It's like traffic moving down the highway. You're inching along, and then you're completely stopped, and then you're inching along further, and then you go faster, and then you come to a complete stop. And that's basically how markets trade. But the interesting pattern is that it's the year or two after the halving. Well, we just had a halving. And so my expectation is that Bitcoin will go up. That's again not financial advice. Don't bank on that. Don't bet on that. That's just what I think is going to happen. It's what a lot of other Bitcoiners think is going to happen based on previous cycles. And then here's a price history chart of Bitcoin. And you can see that it's basically, it's for me, it's a buy and hold strategy. There are a lot of people that short Bitcoin. There are a lot of people, which means they bet against it and they make money if it goes down. So they sell it first. There's ways of doing that through stocks, and there's companies that will allow them to short it. And so they sell it first. They have a sell price, and they hope that it goes down. And when it goes down, that's when they buy it, and they're able to keep the spread. But basically, right now, to me the chart looks a lot like Amazon's chart, where it's just kind of going up over time and gaining momentum um, as it basically builds its network. As the network goes up, it's just adding more and more people that are kind of buying into this scarce asset. And here's a schedule of where Bitcoin has been. And again, year 2024. I'm not sure it'll hit $100,000 this year. No one can be. I would guess, for me, I think it will probably hit $100,000 next year, the year after the halving. Because again, the halving happened this April. Okay, so how do you buy Bitcoin? So there are a bunch of different exchanges out there. I decided not to give you guys names of exchanges. If any of you want um, uh, to know who I'm buying from, you can message me privately. I didn't want to include it in the video. And that's simply because I don't want to, I don't know, I don't really want to help you too much. I want you to do some of your own research and do some of your own um, investigation into an exchange. But basically, all you do is link your bank account. Some exchanges have more KYC than others. KYC is know your customer. So some are going to want your social security, your name, your driver's license, date of birth, uh, address, all that kind of stuff. Others don't. Others have little to no KYC, where they just want your email address and they work with you that way and verify it. But what they do is they hold, when you buy Bitcoin with them, they hold it on their exchange for, some are holding it for a month to make sure that, um, like organizations like the FBI, don't contact them and say, hey, we think someone's laundering money through your business. So they hold your Bitcoin before you can actually take self-custody of it and download it for a month, and that way they kind of protect themselves from bad actors. And then I said I would talk about wallets a little bit. So you can buy a wallet on Amazon, is probably one of the easiest places, or Best Buy, or wherever you want to buy electronics. You should never ever buy a used wallet. You should never buy one that's been opened or compromised in any way. And it's basically like a thumb drive, and you just download from the exchange your Bitcoin. You you're technically not even really downloading. All you're really doing is accessing the Bitcoin network through that wallet and through the software that comes with it, or that, the driver that you download. And it basically accesses the Bitcoin network, assigns you a seed phrase and a passcode for that wallet so that you can easily get on your computer and send value to anyone. I've sent Bitcoin to multiple people. All I need is their address. They can easily go to their wallet and get their address and send it to me. I get their address. I put it into my software that comes with my wallet. I tell them how much dollar value of Bitcoin I want to send them. I might want to send them $100. I might want to send them, you could send them any denomination of dollars. I could send them $57. I could send them $5,700 worth of Bitcoin, and it calculates the number of Satoshis, and it sends it in about 10 minutes. They'll have their Bitcoin, which, by the way, also is very superior to the Swift system. This is why banks are getting on board with blockchain. Every bank right now is scrambling to figure out which technology they're going to use, which blockchain technology they're going to use, because the Swift system is old. It takes a week, basically 5 business days to send money anywhere in the world. You can wire money, and the wire does not settle for, I believe it's 5, sometimes 7 business days. And again, Bitcoin, you can send Bitcoin anywhere in the world and it'll settle in 10 minutes. So there's a lot of value there, in my opinion. Another way to buy Bitcoin is through the ETFs. I do not own any Bitcoin this way, but uh, BlackRock is probably the biggest player in the Bitcoin space right now. The SEC approved all the spot ETFs, I believe, in January of this year. And um, so so now Wall Street is involved, and there is a wall of money that is, excuse me, scheduled to come into Bitcoin. There are um, there are already hedge funds that are buying Bitcoin through these ETFs. There are 401k plans that are buying Bitcoin, and there are a lot of people. Like, the irony is that a lot of people that hate Bitcoin are already owning it. If they own the S&P, they own Bitcoin because they've got shares of of Michael Saylor's company. Well, I'm drawing a blank on it right now. Um, anyway, and they've got, and if they have a 401k, chances are they either already have Bitcoin in that 401k or will have it soon. Um, and the last thing I want to talk about is stranded energy, because Bitcoin got a real black eye in 2020. Well, 2018, 2019, 2020, because they were buying the mining rigs take an extreme amount of energy. And so Bitcoin really kind of got a black eye, and companies like BlackRock came out with this, um, wanting to do an ETF, and they said, we unfortunately we cannot invest in Bitcoin because it is not green. It doesn't abide by our ESG standards, so we can't do it. And they worked with the miners, and they talked to them about, like, what they could do to become green, basically. And so I just want to talk about that really quick. That with solar and with flare gas is probably the one that's the biggest difference. So I'll talk about that one first. But basically, there's a lot of Bitcoin miners that are actually building their mines, their buildings right across the street from big oil companies, and they're actually purchasing this flare gas, which is just burned off and wasted, and they're buying that. And the reason that they have to move so close is because a lot of these oil rigs are so remote that there's no pipelines for that gas. There's no way to get that gas um, to market, and so it's actually the cheapest just to burn it into the atmosphere. And of course, that isn't green. So there are quite a few mines that are actually running off of natural gas. They're buying it directly from the oil miners. The others are doing something a little more creative. And a lot of people don't know this, but the lights that are on your computer that's running right now, it's running off of the power grid, which, if it's being generated through hydro, uh, or if it's being generated through coal, or if it's being generated through nuclear, or whatever's running your local power plant, the lights that you have on right now, the energy for those lights are being generated at this second. There's no energy stored in the system. And so when the power company turns on in the morning, the demand will be lower. And then as people start waking up, the demand kicks on higher. So they turn on more and more generators to satisfy that demand. Okay. And the demand looks something like this, right? So people are doing different things, turning things on and off. Um, and maybe the clouds go away and the sun comes out, and all of a sudden everybody's air conditioners kick on and there's a spike. Well, the power plants have to generate electricity way above these spikes, because if they get a spike into that breaches the top of what they're producing, they'll get a power outage. So all of this energy up here is what they call stranded energy. This is one form of stranded energy. Another one, for let me go back to the solar really quick. Another form of stranded energy is with places that are super remote in the world, and there are different towns and municipalities that are generating A lot of them are third world countries where they're generating power through solar, but they have the same problem. They're generating more than the demand. And so smaller Bitcoin miners are locating next to those guys and buying their unused power. So basically, this zone right in here is the zone that Bitcoin is actually buying from the power plant. And because they have, so the big mines have thousands of nodes, or thousands of mining computers, they can write a piece of software that will work with the power company. And as demand spikes, the miners shut down computers. And as demand wanes, the miners fire up computers. And this is what has allowed ARK Invest and Fidelity and BlackRock to invest in Bitcoin. So the last thing I wanted to share is Bitcoin resources for you. If you really want to go further and you want to know more, this book, The Bitcoin Standard, is really good. So is Cryptocurrency for Beginners. And you can, again, I mentioned you can access the white paper and you can actually read what Satoshi was attempting to do. And, and he gets pretty deep into that. There's a YouTube channel called or called Bitcoin University by Matthew Kratter. Matthew Kratter worked with Peter Thiel and was one of his hedge fund managers, and I think he's the best channel on Bitcoin on YouTube. So with that, that's what I got for you guys. And if you have any questions, I'm going to actually.
What would happen if the government wanted to confiscate people's Bitcoin or their wallets?
So that's a good question. And in the Bitcoin community, and a lot of people are thinking that because the SEC approved the Bitcoin ETFs, that there's a lot of people in the government that want Bitcoin to happen. There's a lot of states that want people to be able to use Bitcoin. There's people in the government like Elizabeth Warren who hate Bitcoin. So the government isn't a monolith. It's a bunch of people. And there are a lot of people who want to shut Bitcoin down. And believe me, if they had a physical address and if Satoshi hadn't kept himself anonymous, it would have been shut down long ago because it's looked at as a threat to governments. And that's what makes it so attractive to me is
So
I want.
you're saying the only way to shut it down would be to kill all the computer connections.
Correct. That would be the only way. So the thing is right now is that Bitcoin is never going away completely. Can governments make it hard on us to buy and sell and use it? Yes. And I would point to situations in the world like France in 1990. There's a really good book if you're into this. I'm into this stuff, so I read stupid stuff like this. It's called Fiat Inflation Money in France, and it's a clinic on how governments can't not be governments. So basically in France, what was happening at the time is one of the first experiments, other than the Chinese with the experiment with fiat, is France in 1790, around that year, 91, decided to make paper money. So they made this paper money. And a guy named John Locke said, the problem with that is you're going to want to print more and you can't print anymore. And
Debasement inflation.
yeah, inflation. You're going to create inflation. You won't be able to resist it. This is a bad idea. They did it anyway. So they printed this money. They kept printing money. And pretty soon, the prices of goods and services in that money were skyrocketing. I mean, like, not like what we're going through. They were going through hyperinflation right away because they just kept printing money because the ruling class were like, this is great. We can just have all the money we want. And so what happened was there were two sets of prices. There was a gold and silver price, and then there was I can't remember what their dollar was called, what their paper money was called, but it's been a while since I read that book. But basically, nobody wanted the paper. Well, the government made it. Um, they said it is illegal for you to use gold and silver, so they made gold and silver illegal to use. People used it anyway at their own peril. Some went to prison for using gold and silver. But what would happen is then this all happened within the space of about 5 to 7 years. It happened really quick. First, it became illegal to use gold and silver. Then people figured out they couldn't use paper because they couldn't stay in business. So businesses started shutting down. Then the government mandated that business had to stay open. But business owners knew that they couldn't buy the ingredients for, let's say, a loaf of bread at a high price and sell it for a lower price of fiat money, which getting any they weren't getting enough value out of the paper. So what they would do is they would open at different times to different people, and they would secretly spread when you could come and get your bread from them with gold or silver. And there was this basically black market that was emerging. And
So
finally,
it wasn't a free market; it was an insider market.
yeah, it was an insider market. And pretty soon what happened was, and I see that there's some questions. Let's see. Oh no, okay. Did they forget there? Okay, I'll look at those in a second. But so basically what happened within 7 or 8 years, the government completely collapsed under their own laws. And then the new person that came in said we got to use gold and silver. And that's actually the catalyst for why France ended up making quality handbags and suitcases, and and is known still to this day for making high quality luxury items. And it's because that was what got them back on their feet. They were in such bad shape financially that there was a push through the whole country to, you know, do whatever you can to make quality goods and sell it to other countries so that we can get some money, some real money in our country. So I guess the reason I'm going through this whole thing is like if a government were to make it hard to use a wallet or to use an exchange or whatever, I think it'll be temporary. I think it'll be, I don't think that they can keep that going forever. And the more and more people that get on this system, like for instance, they banned Bitcoin mining in China, and then they approved an ETF. So China just a few months ago launched an ETF for Bitcoin. And I'm working with a printer in China right now, and he's like, "Yeah, we're not really allowed to own Bitcoin. We can own the ETF, but we can't own Bitcoin." And I just started talking to this guy that works at my printer, and one thing led to another. And I'm like, well, does anyone in China own Bitcoin? He's like, oh yeah, a lot of people have Bitcoin. A lot of people have it on their downloaded to their wallet. And he says, I own Bitcoin. So the thing is, they can't they really can't confiscate your Bitcoin. We had gold that was illegal to use in this country, right? During the gold buyback. And I don't know exactly what year that was. I should know what year that was. That was early in the 19th century, when the government basically said, "Hey, um, we need all your gold, so we're going to buy it from you for $20 an ounce." And then the next year, they revalued all that gold at $35 an ounce. So they effectively just stole everybody's money. And then gold was legal to use again. And one thing that a lot of people don't know too is that one of the biggest Bitcoin wallets addresses is owned by the US government, and they have over 200,000 Bitcoins. I think it's worth $14 billion, somewhere in that range right now. The reason that the US government has it is because they've confiscated it from what they have deemed illegal activity. But I noticed that they haven't sold it.
How do they confiscate it? I mean, is it because I've also heard that some of these exchanges are less secure than others as far as that stuff and surveillance by the government and that kind of
Uh-huh.
thing.
So they can't confiscate it from your Bitcoin wallet. They can't confiscate it from the network. Like, let's say there are ways to get your seed phrase. So your Bitcoin is actually stored in those 18,000 nodes, which is actually more like 50,000, but not all of them. There's like 54,000 nodes, but only 18,000 of them have decided to allow them to be visible. More than half of them are running those nodes for themselves for different reasons. They can actually earn money with those nodes, but they have chosen to make them anonymous. Um, all of your Bitcoin is stored on all of those ASIC computers in every country. And from what I understand, Bitcoin is kind of like if you're familiar with what a Trojan is, or I'm sorry, not a Trojan, a worm virus on your computer, where a worm has like three, it writes itself into three different places on your hard drive. And Norm, you can jump in here if I'm getting any of this wrong. But
I don't know that stuff.
yeah, so basically a worm will write itself into three different places on your hard drive. And if you find one of those and delete it, the other two brothers will regenerate the other triplet. And if you kill one of the other brothers, the other two will regenerate it as fast as you can delete it. They'll regenerate the other one. That's basically what the nodes are, except they're not regenerating, but they're all they all because they all have to be in consensus for anything to change on the network. The government can't like see, if the government could seize all the nodes in this country, then there's all the other countries with nodes all around the world that are protecting your Bitcoin. And that's one of the reasons why they say it's the hardest money, harder than gold. Gold
So,
is,
so
yeah,
if we were to take an analogy and talk about my house and how there's a title record at the county, and then we said, Norm, let's say somebody goes in and gets a hold of Utah County's title record and falsifies a few things, and then they claim your house somehow. But they had to do that at 15,000 other counties because they all kept each other's records.
right. Yeah, that's what the blockchain is. And that's why it's you don't the funny thing is Bitcoin was the catalyst for the whole world using a Bitcoin like system. Banks aren't going to be using the Bitcoin network, but they're going to be using the technology that came from it in
That
blockchain.
blockchain ledger verification
Yeah,
system.
because it's an innovation that is world changing and it can't be denied. So they can't confiscate your Bitcoin unless they put a gun to your head and demanded your 12-word passphrase. Yeah, yeah. Some people have said it's the only thing you can take with you when you die. The only money you can take with you when you die. So,
So in essence, if somebody loses their wallet or their phrase for their wallet, let's say, because
mhm,
you got a wallet ID and you have a phrase to access it, it's
right,
kind of two parts. And so if you lose your ID number, you're hosed, and if you lose your passphrase, you're hosed. So some people will do multiple different wallets and multiple different passphrases, one per wallet, and keep them someplace really safe.
right,
Whether that's at a bank deposit box or something safer than that, or outside in the signpost by your street or wherever they want to keep it.
right.
So they keep it spread out in case they lose some, they don't lose all.
That's right. And you're like I said, you don't have to have a wallet. Like, so I actually have a wallet, and it looks like this. Let me stop sharing my screen.
Well,
Let's.
and there's software wallets and hardware wallets.
So this right here is my hardware wallet, and like if somebody stole this, unless they had they need a it's either a 6 to 10 digit code. I choose whether it's 6, 7, 8, 9, or 10 digits. And I set that up myself, that passcode. So if they steal this, they don't have my passcode to get into this, which
But even if they did steal that, you could just go get another one and say, "Here's my Bitcoin wallet number. Let's go again." We don't care that somebody stole it. They don't
that's
have
right.
access to it, so I'm going to get a duplicate, and the first one's inactive because nobody knows how to activate it.
That's right. Yeah. So if something happened, if we had a fire, I would simply go on Amazon, order another one of these or a newer one. There's actually newer technology. This is called a treasure. Um, and there's newer technology that is coming out every couple of years that's making it harder and harder for people to steal your Bitcoin, basically. And
And that's not Wi-Fi enabled or anything. It's just a
no,
USB device. Once it's off the network, nobody can read it.
yeah, it's cold right now. There's nothing coming in or out of here unless I plug it in. And so I don't share my code with anybody. But the seed phrase is what I would put in those 12 words. If I lost this or if it got stolen, I'd get another one from Amazon, and it would say when I set it up, the software would say, "Oh, is this a new wallet that you're going to download Bitcoin to, or do you want to recover your seeds with this wallet?" And I would say, "I want to recover my seeds," and it would say, "Okay, type in your seed phrase, and at that point, I need to know those 12 words in order. I will say this, there are a lot of videos on YouTube on all of this stuff. You can type in specific things, and people are more than willing to share exactly like how to handle it. But like as far as keeping your seeds safe, I would never write down 12 words in order, because as we move forward in the future, people are going to know if they break into a house, or if the cleaning lady sees something, or the contractor sees 12 words written somewhere, they're going to know that that is pure Bitcoin right there. That is pure unadulterated. All I have to do is get a wallet from Amazon, type those words into it, and I will automatically transfer the Bitcoin that was. So like if my wallet is still sitting where I've hidden it, and someone finds my 12 words, they don't need this. They can just get a new wallet from Amazon and recover it and pull it right from here. Then
Well,
this
they
one,
do have to have your wallet ID and then put in the 12.
yes, you're right. Yes, you're right. They have to have the wallet ID. Yeah. So what I do is I created a cipher. So I have, instead of 12 words written down, I have over 100 written down. Only I know where the 12 are in order in that 100, which is a layer of security in case it fell into the wrong hands and someone ended up with it. And in which case, if we had a break in and I saw that my 12 word or my 100 words were missing, I would get a new wallet, and I would transfer it over to the new one, and I would end up with a new 12-word seed phrase. And if they were trying to crack my cipher with those 100 words, they could try, and eventually they'd be successful. But by the time they did, my Bitcoin would be on a new wallet.
I feel
So
like
you,
I have like tons to learn about this, and I'm like a baby in it, but so there's not like right now there's not a lot of way to like pay your Bitcoin to buy stuff. Is that right? Like
That's
unless
right.
you like are giving it to someone.
That's right. Think of it more as gold, as digital gold. So if I have digital, or if I have physical gold, I'm not really looking to buy stuff with it. And the thing is that there's two parts to this, and that's a good thing to bring up, Shauna, is right now people hold gold to preserve their wealth and to hope that it will keep up with inflation. There are a lot of people that say that gold and silver are not keeping up with inflation if you look at the true inflation rate. But it does increase in value over time. And so a lot of people try to hold their wealth in gold, but they don't buy and sell stuff in gold. But if they need that money, they can sell it and trade it in for fiat currency and buy the things that they want. The theory of what's going to happen with Bitcoin is, when we first started, and there's the chart that I showed where the price history of Bitcoin, which is up and down. Um, in the early days of Bitcoin, there were 80% up cycles. In other words, um, well, 100x, 1000x price increases, and 80% drawdowns. And then in the last cycle, there were 60% drawdowns. And then the last one that we had, more like 50% drawdowns. And over time, every time we go through a halving cycle, those drawdowns are going to become more and more stable, just like gold. So right now, and I'm not trying to create an urgency for you to run out and buy Bitcoin, but in the earlier years of Bitcoin, and we are still very early in Bitcoin, in the earlier years, there's more money to be made as an investment than there will be down the road, where it will become more of something that people hold their value in and make payments to other people using what they're going to call, or what they're already calling, layer two solutions, like the Lightning Network, which allows the Lightning Network is like basically on Bitcoin, because it takes 10 minutes. If you're going to go buy a cup of coffee with Bitcoin today, Bitcoin would not be the best way to do it, because the person selling the coffee has to wait 10 minutes before the transaction goes through. Some people are saying that that's a weakness of Bitcoin. There are some really smart programmers and developers that say you actually want it that way. It's actually, the network is way more secure with that time feature built in. And so the solution to that for making payments is to have a Lightning Network where you will transfer. Let's say you have $10,000 worth of Bitcoin, and you want to buy something with it, or you want to make little micro payments with Bitcoin. So you would transfer, um, let's say 1,000 of those ten thousand
almost
dollars.
like get yourself a mini wallet in a wrapped currency or something.
Yeah, so you would basically get another wallet. It's not going to look like this. It's probably going to look like a credit card that you can swipe because that's the kind of payment processing that we have. You'd have a credit card, you would load $1,000 worth of Bitcoin onto that credit card, and then you would use that credit card to make payments. And a lot of people do feel like within 5 or 10 years, there will be a Bitcoin price listed in a lot of our stores around here. That might be really optimistic, but the way things are going, that could be a reality where you're looking at a Satoshi price, or a Sats price is the nickname for Satoshi, Sats. You're looking at a Sats price versus a dollar price or in conjunction with, and you can make a payment with your Bitcoin with a card just like you would at a store with a credit card.
So it's like instead of petty cash, it's petty crypto, and we could call it quick coin instead of Bitcoin.
Quick coin. That'd be a good name for one of the networks. So yeah. So
Do you have any questions? My husband's listening too.
oh, okay.
I'm not smart enough to have any questions right now.
You know,
But when you buy crypto, the value might go up or down depending on like how the market is.
Yeah, I bought a lot at 18,000. I bought it 20 all the way up to 25. I buy almost every week still. And I bought at 60,000. I bought at 65,000. I bought at 67,000. Um, and now I think today was trading at 63,000. So those dollars have been reduced. The reason that I keep buying, and they call it DCAing or dollar cost averaging, if you buy like a set amount every week or every month, is so that you don't buy at the top of a of a of the market. And the theory is that if you buy, on a frequency like every other week or every week or every month, that you'll also catch some of the bottoms of the markets. So you'll buy some tops and you'll buy some bottoms, and they'll average. Your Bitcoin price will be never. You'll never get the biggest drawdown as if you lump summed at the top of a cycle and then had to watch it go all the way down. I had to watch my Bitcoin go from in 2020, from 2021, go from 63,000 down to 18,000. And I had a lot. And I just watched it. But because of the charts that I showed you and the halving cycle and the adoption rate, I have every belief that there's really no bad price for Bitcoin if you have a 5 to 10 year time horizon on using it or selling it. Because every 5 years you're getting one of those 4 year cycles, and that's enough time to where if you bought any time in a 5 year period and held it for 5 years, you're up on your money. And that's historically. That does not mean that that will happen in the future. Um, I believe that it will, but that's a belief. And the past is
Yeah,
not.
well, that's just your opinion, man.
What movie was that from?
Um,
The Big
Jeff
Lebowski.
Bridges.
The Big Lebowski. That's right. Yeah, man.
That's
Well,
just your opinion, dude.
Aggression will not stand, man.
Yeah. Yeah. So anyway, they do call Bitcoin a humility test, and they say that because you really, in order to feel comfortable investing and spending your hard-earned dollars in it, you really need to learn a lot about it. And I wanted to be sure about my investment. And, I got burned when I bought Litecoin because I didn't know anything about it. And I decided that, and Norm knows my history. Norm was studying to be a trader. And one day I rolled in. I'm like, hey, Norm, I'm gonna trade S&P mini futures. This was back in 20.
I think I said something like, get out $3,000 and burn it.
Yeah,
And that's a good test for whether you can handle it.
right. And little did I know that my good buddy Norm uh, knew everything and then some about trading, and I didn't know anything. And I spun my wheels, and luckily I didn't lose my shirt. But what I learned was I didn't know anything. And then when I started trading on Robinhood, which by the way, if you're using Robinhood and you buy Bitcoin there, you don't own your Bitcoin. You can't download it. It's not a really good way to own Bitcoin. The whole purpose of owning Bitcoin is that you control it, that you're out of the system. You're your own bank. You are autonomous with your money.
So you
And
can't spend it. Can you trade it for other things?
you can trade it for other things, but if Robinhood goes belly up, you lose your Bitcoin. I want to be out of the bank. I want to be out of companies.
I heard that some people don't even have to have, you don't have to have a wallet if it's just a store of value, right? You could literally have your wallet number, uh, um, your wallet number on paper and your 12 seed phrase
Yes.
in the back of a book on a post-it note somewhere.
Yeah, and there are some people that are saying like one reason why I got the treasure is because I had a ledger. Um it looks something like, gosh, where
which
is
is
it?
fine until they burn your house down. But
Right. Oh,
Yeah.
here it is right here. So I had this little guy, this ledger wallet, and it's another little USB thing. And then I find out from because I'm watching YouTube channels, I watch this Bitcoin University guy. I find out that these are the software running the Ledger company, which they were the number one, and they ruined themselves. It's it's not open source software, so there was a back door into this wallet that the company had. And when everybody found out that, most of the people threw these away. They were making videos of running them over
Like
and
game over, man.
smashing them. Yeah, there was a back door, and they're saying, well, what if the government went to Ledger and said, "Hey, we need into this wallet here," and Ledger's like, "All right, man, you can come in, and here's how you get in there," and then they go in and confiscate your crypto. So everyone burned these, and then they said, "Get this one, Treasure, because it's open source, and every programmer can see the code, and so it's much safer." But this one you do attach to your computer, and so the theory there is if someone's in your computer, if you're hacked, there's a possibility that they could get you while if I go in here to sell some Bitcoin, there's a possibility that someone could intercept somehow, take over, and get in. Very slight chance, very, very, very slim, but is a chance. And so there are companies out there right now that have technologies that don't require you to be hooked into the internet, and I don't know how those work yet. They're coming out and they're very new. And there will be more and more technology that will make Bitcoin safer and safer and safer as we move forward, um, because they're incentivized. There's a market to be had there. People want to participate. They're just like you guys that are asking questions. We all want our money to be safe, and we don't want to find out that it's just gone. And and so, and a lot of people are scared about, I don't necessarily want to have my passphrase and worry about losing it or having a fire burn it up. Some people keep it in multiple houses. There's another thing called multi-sig where you actually keep parts of your seed phrase in three different cities, and you can't access it. So if somebody put a gun to your head, you would have to actually fly to another city to get the rest of your seed phrase. Again, this is kind of like the people that are storing lots and lots of Bitcoins, maybe millions and millions or billions of dollars worth of Bitcoin. They don't want someone putting a gun to their head and saying, "Give me your seed phrase." So they can't. It's kind of like, if you go into a 7-Eleven and you hold up the clerk there and they have that safe that drops $100 over time, every 10 minutes. There's no money to be gotten there, and you can kill the store clerk, and all the criminals know this, and so they don't hold up 7-Elevens once they came out with that technology. So there's similar technologies that are coming out.
And none of that really matters if you're a small player.
A lot of people engrave. My Lily just said a lot of people are engraving their seed phrase on tin or aluminum. Anyway,
getting a
they're
tattoo.
what's that? I'm getting a tattoo. That's funny. Yeah, so they engrave them on metal, so if they do have a fire, it'll survive on steel or something. But to me, if you create your own little cipher and then you store it in different places, the chances are that you'll just be fine, and you'll be able to have that. So
Have a backup plan in case you get dementia.
yeah,
That could
yeah,
be, yeah, part of a trust of some sort, or and give someone else the power of attorney or something.
uh-huh. Oh, what would you do? Are you saying?
No, no, I wasn't asking a question. I was making a comment.
Oh, yeah, 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 yeah. We've actually thought that if because we're thinking about making a trust, that we would, obviously we're going to will it to our kids, and that we would basically give them instructions on how to get into it, and have that in a sealed envelope in the safe of the trustee. You really have to trust the trustee in that situation. But I think that's
You
why
Definitely.
can
they're
do
in
the
business.
same thing, and you can put half the directions with one trustee and half with the
With
other.
another, yeah, yeah, yep. There's ways to make things safe.
But then you'd have to trust two people.
Yeah. Make sure they don't know each other, right? So,
Thanks, Will.
Yeah, that would be.
Appreciate it.
yeah, thanks a lot, you guys, for showing up, and hope that it was beneficial to some of you. And I'll post this on Facebook or on YouTube for any of my people that are interested in it to take a look at it. But I hope that it helps us moving forward, because I think we're in for some dangerous times with our banking situation.
So basically, you're basically saying governments cannot resist debasing currencies.
Right.
This is a currency that will not debase.
That's right.
And therefore, it's a better inflation hedge than even gold, because gold is still getting mined at a pretty high rate, even though Bitcoin's going to get the rate's going to go down every 4 years.
Right. Yeah, if you think about it, like, so Michael Saylor's with Michael Saylor, the company I couldn't think of was MicroStrategy. So they just made the S&P 500. They're a Bitcoin company. I mean, like, that's not their that's not what they were doing, but Michael Saylor put all of the company assets into Bitcoin. He got a vote of his employees, and he basically owns over 200,000 Bitcoins. I think it's like 220 or something like that. Billions and millions of dollars of Bitcoin of the company money, and they're traded as part of the S&P right now. So anybody that owns the S&P owns a piece of MicroStrategies. But the fact that there's these what they call whales, there's wallets that hold thousands of Bitcoin, hundreds of Bitcoin, tens of thousands of Bitcoin, hundreds of thousands of Bitcoin, and you can see them all on the ledger. So if there's companies that own that, they basically say there will only ever be about 1 million people on the earth that will own one coin or more. Um, Over time, the price will get to a point where it's just not affordable for the average person. Um, and I believe that that's going to happen over time. I think that the adoption rate has been growing steadily, and there are mathematicians that say that it's following a power law. Um, and again, there's lots of really good videos out there on YouTube that where they go through this kind of stuff. And so, anyway, thanks a lot, you guys.
Okay, thank you.
Yep. Take care.
Thanks
Yeah,
so
thank
much.
you very much.
You're welcome.